Well, hello again, Solas family. Greg Solis here with our weekly update. Quick update on the family. Everybody's doing great. Jack is now in Texas, still on the AP tour, the so-called All-Pro tour, kind of following the Corn Ferry around, playing in Monday qualifiers, and then playing in a pro event if he doesn't get into the Corn Ferry event. But he's loving life. I mean, he's off by himself, staying in Airbnbs and playing golf. So he made his first cut. That was kind of cool. Didn't do too well after he made the cut, but he made the cut. Had to shoot 3 under to make the cut after a 2-day cut line. So he's doing well. Nicole's doing great, surfing a lot, enjoying Duke's, they got her there as a hostess, and so she's loving life. And Emily's also a hostess here at a local restaurant called Palmer's Restaurant. So all the family's doing great. Monica's doing well, and so all is well. And on our end, I hope everything is well with you also. Market-wise, boy, what a volatile time it's been. You know, after on March 8th, we kind of what appeared to be us bottoming out after the S&P 500 was down about 13%. The NASDAQ, as I mentioned last time, was down over 20%. So that was a pretty big pullback. Then we bounced back. Last week, we had a nice bounce back where we got about 8% back from the bottom that we hit on March 8th on the S&P 500. So that was good. But then, of course, it just continues to be real volatile. Question is, are we finding a bottom? It seemed like the buyers came in when the Fed raised rates about 25 basis points. We all kind of anticipated that. They throttled it back a little bit. There was thought that they might raise the Fed funds rate by 50 basis points or 0.5%, and they did it just 0.25%. So the Fed's going to have to do this. Inflation is still an issue. They got to try to control inflation. Oil prices being high is a problem with the Russian invasion of Ukraine. And so that is just creating a very dicey situation. And so we're going to have to keep a good eye on this. It's created some headwinds for sure because we already had the supply chain issues and some inflationary issues. And now with oil prices going up and seeing that kind of spread through the economy, that is a tough thing to be dealing with. And so the Fed is going to have to raise rates to try to slow things down, but they need to do it without throwing this economy into a recession. So the hope is that they could create what's called a soft landing. In other words, you've got to slow things down a bit, but without throwing us into a recession. So we've seen interest rates go up quite a bit on the 10-year Treasury. It's up over right around 2.3%. Good news, bad news, borrowing's going to get a little more expensive. Good news is we might see CD rates starting to go back up, and some of our savings rates might go up a little bit. So that's the good news on that side, but rates have certainly gone up quite a bit. If you recall back in the after the pandemic hit, and it's hard to believe it's been almost exactly 2 years since the bottom. After the pandemic hit, we saw the S&P 500 drop over 30%. At that time, we saw interest rates on the 10-year Treasury at about 0.5%. So it's gone from 0.5% up to over 2.3%. That's a huge move in interest rates. That, of course, creates a challenge for bonds for traditional fixed income investors. But bonds are getting a little more attractive now with rates going up. And so that's kind of a good thing. So overall, everything is real volatile, but hang on tight. We still are optimistic that hopefully we're finding a bottom on the equity markets, that 2022 will end up being a decent year. So we'll see how it plays out with this Russian ordeal. We'll certainly be praying for the Ukraine people. It's just a tragedy what's going on over there. But other than that, everything's in pretty good order. If you need us, give us a call. My best to you and your family. Look forward to seeing you soon. God bless. Bye-bye.